There is nothing difficult or tricky about candlestick analysis. It's merely the analysis of what price movements are doing based upon the nature of the investor sentiment that's creating a trend. For example, as we can see in the Dow, we started off with a very nice strong price trend that broke out through this downtrending channel, and then when it started consolidating, there's two things that can happen in a consolidation. Either the sellers can take control, or there's profit taking where the bulls aren't going to let it move back very far. And in this case, we can identify that easily by indecisive trading. Little shooting stars, dojis, hammer signals. This is indecisive trading, not the decisive candles that tell you when a trend is in a major move. So on an indecisive trading, on a pullback, that's usually an implication that this market is not reversing, that it's still in an uptrend. So here's a case where we can identify the pattern. Strong price move, indecisive pullback, now starting back up. This is a J-hook type pattern, and as long as we stay above the T-line, we can assume we're still in an uptrend. And that's even more evident in the NASDAQ chart. When it broke out through this resistance level with a type of a scoop pattern, and as you can see the pattern develop, you can also see what's creating the pattern. Doji, gap up, doji, gap up, doji, gap up. These gap ups pretty much tell us they're anxious to get back into this market. Strong price move, nice slow rounding bottom. Now we're in the next price move. So knowing the elements that are in each pattern, such as wave 1 and wave 3 are usually equivalent, we can pretty well predict that we're in a steady uptrend for a while until we get close to the magnitude of this price move right here. Identifying patterns such as the fry pan bottom and a big breakout is exactly what you would expect coming out of a fry pan bottom, but just consider the logic. For months, this stock has been trading very indecisively, and now STXS, which we started buying today on positive trading, told us they had a breakout, they had consolidation back to the T-line, then the bulls have stepped in. These are the price movements or the chart patterns where the price movements can be very extensive. So candlestick analysis allows you to identify where the strong price moves could be, or identify patterns that are going to have some consistency to them. One of the strongest professing aspects of candlestick analysis is the Japanese rice traders say, let the market tell you what the market is doing. In this case, after they broke it out, notice how they couldn't close this below the T-line, and when it was time to take profits, when we saw some sell signals where it moved away from the T-line. Now we've moved back very indecisively to the T-line. The market is telling us what it's trying to do. It's not closing below the T-line. There's a good possibility you're going to be in another move to the upside, staying above the T-line. This is not rocket science. This is just common sense investment practices put into a graphic depiction. That'll be it. We'll see you in the chat rooms.